but with RS Sharma, former Chairman and Managing Director of the ONGC, Jonathan Barratt, Chief Investment Officer with Probis Securities. Gentlemen, good morning to both of you. Sharma ji, haven't met you in a while. How are things?
Well, you can make out I seem to be good, enjoying my life. So, how?
Mr. Sharma, crude prices went to 130 and they've come down to 85. But they've gone to 130 because there was a war in the world, supply chains were disrupted, and there is a crisis in terms of what OPEC and non-OPEC countries would produce. Those concerns are still there. Winter is nearing, it will be a chilly winter, war is not resolved, OPEC is not producing more, yet crude prices have come down.
Well, Nikunj, one is that there are multiple that variables that affect these prices. Today, the most significant one is the Chinese demand, Chinese economy, Chinese energy sector, whatever the turmoil they are going through because of the COVID infections. So there's a feeling that the demand in China is going to remain low. So that is one factor that is affecting the sentiments. And there was a recent news item that OPEC Plus, they have decided to increase the production. So there's no official confirmation, but that again reflects on the sentiments and the derivative market. We must realize crude oil is the most traded commodity in the world. And the derivative trades are multiple times than the actual trades happening on purchase and sale basis. So the derivative market is highly volatile and moves by sentiment. So today, right now, when we are talking, I quite agree with you, the prices are low. But our Indian government had factored in the budget the price range of $70-75 per barrel. We are still much higher than that. And now this, price cap being talked about coming week on the Russian oil. As it is, Russian oil is getting traded, getting sold. Indian refineries are fortunate to buy it at these prices. So all these factors, as of now, I see momentarily in the short run, it seems the prices are low. But, well, let us see. Russia has gone on record to say that if you put a price cap, oil prices will go past $200 a barrel. That is again, energy sector, demand, supply. Let us see how the things pan out. But from the Indian perspective, we continue to wish and pray the prices remain low. But personally, I'm afraid this may be a short-term phenomenon. And long-term phenomenon, it does not indicate that the gap between the actual demand and supply has been shrinking. New investments are not happening, and there's no substitute to crude oil, unfortunately. So let's keep fingers crossed and let us keep wishing prices remain low. But I'm afraid they are not likely to remain.
Jonathan, hi, morning. Just to take off from what Mr. Sharma said, that the fact that the gap between the demand and supply is shrinking, there are no new investments and no substitute to crude oil prices. Do you think that those are some of the key concerns as to why we're seeing this acute volatility play out?
Look, I tend to agree with a lot of his sentiment, but I think at the moment, I think one of the most important things is where that cap, the G7 cap, will actually come in. I think if we get it sort of north of 75, it's not going to make too much of an issue. If it comes in below that, sort of around that 50, then I think it is a big issue. Remember, Russia is the second largest producer, and she has a very big sway in terms of where the price goes. So I think as we come into the 5th of December, I think all eyes would be on that for the near-term direction. And if we do see, then I can see a bit of a lift from here. Technically, we're also at a major low. So if this 85 level actually holds and we get a spike, then I tend to agree with my co-compare that prices can get quite hairy to the top side.
So, Mr. Sharma, if we do see the EU agreeing to that oil price cap of about $65 to $70 this week. What would be the downside risk to crude oil prices?
Well, downside risk will be whether, firstly, it is implementable. We know that European Union, US been talking it for quite some time that they are going to implement it next week, next month, but somehow there are difficulties and they know it is not going to be easy. And you look at it at the as rightly mentioned that Russia is the second largest producer of crude oil. What happens if 3 to 5 million barrels of crude stops coming to the market? So prices will go through the sky. No, that is the kind of downside. To me, it is not a wise step to unilaterally try to put a price cap. It's very important the way India is doing diplomatically, trying to engage with Russia and trying to pacify the matters. We have seen in the past the wars do not find solutions. In fact, the diplomacy does. So that is what we wishing. But when we come to the subject, that the downs, firstly implementability, and then in case Russia decides to retaliate to stop its crude production, then what happens? The countries like India, which are 85% import dependent, we know that our economy will suffer very badly if the prices again start moving up beyond $100 a barrel. And I don't rule out that kind of possibility. Personally, to my mind, prices are not going to remain low. Only let's see when this Chinese demand picks up. That's very, very important for us to keep watching. So that's a big factor. But well, I'm sure, as I said, keeping fingers crossed. Let us keep watching. The volatility, uncertainty factor is quite a bit, and I'm afraid prices may flare up if any
Mr.
disruptions.
Sharma, good morning.
Morning.
Mr. Sharma, good morning. This is Nayantara Rai also joining in on the conversation.
Hi, Nayantara.
When you were the chairman of ONGC, I remember your tenure so well, Mr. Sharma, because it was during your tenure at ONGC that we saw crude at an all-time high of $147 a barrel. That was in 2008.
True.
I remember that trip to Madrid when you were going and making a case also for market pricing. Mr. Sharma, today, we're all still on standby for what Mr. Kirit Parikh is going to be recommending when it comes to natural gas prices. We're waiting the Dr. Parikh's committee report. But as someone who's been on the other side, done business as well, had pressure from the government as well when it comes to gas prices, what do you think India is now ready for? Is it ready for, piped gas having a different pricing, consuming industries like power and steel to have different pricing? Because there is a belief that Dr. Parikh is going to suggest something very, very radical.
I know, Dr. Firstly, Nayantara, I very much recall our association. And if you also recall, we have enjoyed a lot of vibrancy in this sector, which somehow I find has been slowly going down and down, missing that much. And, all said and done, Dr. Parikh has a very tough role. Let me tell you, it's not going to be easy. And please look at it. We want to make India gas-based economy. That is the Prime Minister has said so. We want to make the gas share to be 15% of the energy basket. And if this artificial kind of cap is put on the prices, the producers will not have incentive to invest. So new explorations will not happen. And this kind of artificially putting a cap will only lead to higher and higher amount of imports. That is not the long-term strategy should be. Strategy should be to incentivize the domestic producer to produce more. Look at it, the crude oil prices, the producers get import parity price. Why not for gas? Whereas the natural gas is a more preferred fuel than the crude oil. So these are the kind of questions why this gas cannot be brought under natural gas under GST, where the input cost is does not the producer does not get adjustment. So as a result, we have seen for quite some time new investments are not coming, new auction rounds going, but there are no investors coming from overseas. We have seen, and you have seen, the kind of excitement used to be
Right.
there when these rounds used to be announced, and so many global players
Correct.
that time used to bid for it. But where are those global players now? That is unfortunately missing as of now. I wouldn't find fault
Absolutely,
with
Mr. Sharma. In fact, we're still waiting for the Exxon Mobils of the world. We're still waiting for Exxon Mobils of the world to come start direct operations, maybe even help in exploration. A lot has been said about that. But a lot of progress, of course, has been made, all on standby for Dr. Parikh's report. Jonathan, if I can come to you, the big global headline, of course, being what is the G7 going to do when it comes to Russian oil? India has been quite categorical. It's going to look after its own interests, and if it can get cheaper Russian oil, so be it. Still a much smaller percentage when we look at the overall supply. But the kind of commentary that's coming in from G7 going into the sharp winter season, the harsh winter season, how big an impact is that going to have on oil prices, or has that already been factored in your view?
I don't think it's been factored in at all at the moment. I think the market's still trying to find out exactly what G7 are going to do, exactly what the EU is going to do. Remember, we do have 5th of December, and then the 5th of February is the next important date. So I think Russia's got a lot of leverage. Obviously, if we do get a cap on the price leading into, obviously, the Northern Hemisphere winter, it's going to be more sudden. People are going to be concerned about supply. I do think if we get a cap which is below that 60 or even 55, oil prices, I think, will trade quite aggressively to the top side. If it's around that 75 or 80, that's basis the WTI, then I think it could be a bit of status quo there. But then I also think that that'll give enable Russia to then really squeeze and put the squeeze on natural gas. Obviously, natural gas is used there for a lot of heating. So I think that to me is more of an issue, and they'll just cut it off. So really, I think the ball is in G7 and EU as to what they're going to say. They said they'll put a cap in. Let's see what the price is, and let's see what the cap is. And I think that'll then give us a bit of a telling time as to where the price of crude will go.
Completely uncharted territory, aren't we? In let's see how it goes. Harsh winter season coming up. Crude oil prices have started to come down. Can the G7 change that with new sanctions on Russian oil? Thank you, gentlemen, for being live with us today, this Friday morning, and